Seth Andrew Klarman, born on May 21st, 1957, is an American billionaire investor, hedge fund manager, and author renowned for his advocacy of value investing. He serves as the chief executive and portfolio manager of the Baupost Group, a private investment partnership headquartered in Boston, which he established in 1982. Klarman is deeply influenced by the investment philosophy of Benjamin Graham, a pioneer in value investing. He is noted for his strategy of purchasing assets that are currently undervalued and unpopular, with a keen eye on ensuring a margin of safety. By patiently waiting for these assets to appreciate in value, he aims to generate profits for his investors. Since the inception of his fund with an initial capital of $27 million in 1982, Klarman has achieved an impressive compounded return on investment, reportedly averaging around 20%. This sustained success has cemented his reputation as one of the most skilled investors in the financial industry. Currently, he manages a substantial portfolio totaling $30 billion in assets. Seth Klarman was born on May 21st, 1957, in New York City, into a Jewish family. At the age of 6, he relocated with his family to the Mount Washington area of Baltimore, Maryland, close to the Pimlico racecourse. His father, Herbert E. Klarman, worked as a public health economist at Johns Hopkins University, while his mother pursued a career as a psychiatric social worker. Unfortunately, his parents divorced shortly after their move to Baltimore. Even as a young child, Klarman displayed a keen entrepreneurial spirit. At the age of 4, he transformed his room into a makeshift retail store, complete with price tags on all his belongings. He even delivered an oral presentation to his 5th grade class about the intricacies of buying stocks. As he grew older, he engaged in various small-scale business endeavors, including running a paper route, operating a snow cone stand, managing a snow shoveling business, and selling stamp coin collections on weekends. Klarman's interest in investing was sparked at the tender age of 10 when he purchased his first stock, a share of Johnson & Johnson. This investment proved lucrative as the stock underwent a 3-for-1 split and eventually tripled in value, solidifying his belief in the potential of the stock market. His decision to invest in Johnson & Johnson stemmed from his familiarity with and trust in the company's products, particularly Band-Aids, which he had used frequently during his childhood. By the age of 12, Klarman was actively involved in monitoring the stock market, regularly contacting his broker to obtain stock quotes. His early immersion in the world of investing laid the foundation for his future success as a prominent figure in the financial industry. Seth Klarman enrolled at Cornell University in Ithaca, New York, where he initially contemplated majoring in mathematics. However, he eventually opted to pursue economics as his major. In 1979, he graduated magna cum laude with a degree in economics, accompanied by a minor in history. During his time at Cornell, Klarman was a member of the Delta Chi fraternity. During the summer of his junior year, Klarman secured an internship at the Mutual Shares Fund, where he had the opportunity to work alongside influential figures in the industry, including Max Heine and Michael Price. This experience proved pivotal in shaping his career trajectory and solidifying his interest in investment management. Following his graduation from college, Klarman returned to Mutual Shares to work for 18 months before making the decision to pursue further education in business. Klarman continued his academic journey at Harvard Business School, where he distinguished himself as a Baker Scholar, an honor reserved for the top 5% of the graduating class. During his time at Harvard, he had the privilege of studying alongside notable individuals such as Jeffrey Immelt, Steve Burke, Stephen Mandel, James Long, and Jamie Dimon. This period of rigorous academic study and interaction with accomplished peers further honed Klarman's skills and prepared him for his future endeavors in the financial world. Upon completing his business education in 1982, Seth Klarman co-founded the Baupost Group alongside Harvard professor William J. Pourvu and partners Howard H. Stevenson, Jordan Baruch, and Isaac Auerbach. The name Baupost is an acronym derived from the initials of the founders' names. The firm was initially funded with $27 million, raised from the sale of Pourvu's stake in a local television station. Klarman's starting salary was modest at $35,000 annually, reflecting the early stage of the venture and the perceived risk associated with his relative lack of experience. In February 2008, Klarman seized upon a significant market opportunity when he learned of the forced liquidation of assets by London-based hedge fund Peloton Partners. Recognizing the potential for value investing in the wake of the financial crisis, Klarman opened Baupost Fund to new investors, raising $4 billion in capital, primarily from large foundations and Ivy League endowments. He embarked on a strategy of heavy investment in equities, often purchasing up to $100 million in stocks and other assets per day. Amid the market downturn following the collapse of AIG and Lehman Brothers, Klarman focused on acquiring distressed securities and bonds, which proved profitable as the markets recovered. During the financial crisis of 2008 to 2009, Baupost faced challenges like many other hedge funds, with returns ranging from -7% to -13%. However, Klarman's strategic investments in equities and distressed securities, particularly in the aftermath of significant events such as J.P. Morgan Chase's acquisition of Washington Mutual, yielded positive results. Despite the fund's overall negative returns during the crisis, Klarman remained optimistic about the long-term potential for capital gains. In addition to his investments in financial markets, Klarman diversified his portfolio by purchasing a minority stake in the Boston Red Sox in 2009, further expanding Baupost's investment reach beyond traditional finance sectors. In 2009, Seth Klarman capitalized on the aftermath of the financial crisis by purchasing distressed credits, including bonds from CIT Group, a financial holding company in New York City. Acquiring these bonds at 65 cents on the dollar with a yield rate of 15%, Klarman navigated the company's prepared bankruptcy process strategically. When investor Carl Icahn initially offered a $6 billion loan to CIT Group, but withdrew the deal shortly after, the bonds held by Baupost were propelled into prepared bankruptcy. This move resulted in Baupost receiving securities valued at 80 cents to the dollar for their debt in CIT Group. Following the CIT deal, Klarman diversified Baupost's portfolio with investments in the biotech sector. He acquired a stake in Facet Biotech, a new biotech company, at an average cost of $9 per share. Notably, Facet Biotech possessed a net cash value of $17 per share. Klarman capitalized on the opportunity presented by spin-offs from larger parent companies, recognizing these stocks as undervalued and overlooked. When Biogen attempted a hostile takeover of Facet Biotech, driving the stock price to $14 per share, Abbott Laboratories negotiated a settlement for acquisition at $27 per share. Baupost Fund saw significant gains, finishing the year up by 27%. As of 2016, Baupost Group managed assets worth $31 billion, reflecting the fund's continued growth and success under Klarman's leadership. In 2020, eBay emerged as one of the fund's largest holdings, with a value of $1.48 billion. This strategic investment underscores Klarman's ability to identify value opportunities across various sectors and asset classes, contributing to Baupost's sustained performance and prominence in the investment landscape. Key information: Seth Klarman leads the Boston-based hedge fund Baupost Group, which manages approximately $27.4 billion in assets as of March 2023. High demand: Klarman's book, Margin of Safety, revered by value investors, commands a high price in the market. It sells for around $1,700 on Amazon, reflecting its cult classic status and enduring popularity among investors. Donation history: while previously a significant donor to the Republican Party, Klarman made a public departure from supporting Trump in 2016. Since then, he has redirected his contributions towards the Democratic Party, signaling a shift in his political affiliations. Seth Klarman's investment philosophy revolves around the principles of value investing, a discipline he claims to have recognized as his calling since his junior year of college. He perceives value investing as an innate trait, suggesting that individuals either possess the patience and discipline required for this approach or do not. For Klarman, the allure of value investing lies in its simplicity and proven effectiveness. He emphasizes the appeal of buying undervalued assets, which often outperform high-flying growth stocks in the long run. A staunch advocate of Benjamin Graham's teachings, Klarman criticizes the short-term mindset prevalent among many fund managers, particularly during times of financial turmoil. He warns against the fallacy of believing that current market conditions defy historical patterns, stressing the importance of understanding economic cycles and their corrective nature. Klarman adopts a conservative approach, holding significant cash reserves, up to 50% of assets, to weather market volatility and capitalize on mispriced opportunities. Klarman's investment strategy involves making unconventional moves, such as purchasing unpopular assets at discounted prices, utilizing complex derivatives, and investing in put options. During his early years at Baupost, he focused on companies overlooked by Wall Street, prioritizing risk management and maintaining a margin of safety. Despite these unconventional tactics, Klarman has consistently delivered high returns by adeptly navigating undervalued markets across various asset classes. Klarman's investment approach involves seeking out undervalued companies facing challenges or experiencing low growth. For instance, during the decline of energy stocks in 2015, Baupost actively sought investment opportunities. Klarman's willingness to bargain hunt in distressed markets has been a hallmark of his investment strategy, enabling him to capitalize on undervalued assets and generate significant returns. In contrast to many investors who closely monitor daily price fluctuations, Klarman maintains a long-term perspective and demonstrates little interest in short-term market movements. He famously does not utilize a Bloomberg terminal, emphasizing his focus on fundamental value and the broader investment landscape rather than transient market trends. Seth Klarman, along with William Lawrence, has delved into the world of horse racing since 2006 through their ownership of Claridge Stables, Inc. Their notable achievements in the sport include victories at prestigious events like the Preakness Stakes. Notably, their horse Cloud Computing clinched the title at the 2017 Preakness Stakes, showcasing their prowess in the racing world. The success of Klarman and Lawrence's racing endeavors has not gone unnoticed. In 2019, they received the Outstanding Owner Award at the Eclipse Awards, a testament to their remarkable achievements in the sport. Their horse Bricks and Mortar played a pivotal role in securing this accolade, highlighting their consistent excellence in horse racing. The duo's triumphs in horse racing have continued to flourish over the years. In 2022, Klarman celebrated his 65th birthday with another victory at the Preakness Stakes.